Namaste. In this video, the focus is on long-term capital asset and long-term capital gain taxation. Well, the indexation factor is removed, which was introduced in mid-1990s, and we are saying a buy to indexation for all assets which get sold on or after 23rd July 2024. And isn't that indexation is a gone scenario? Actually, no is my answer, because in the budget speech or in the finance bill, they said all long-term capital gain will be taxable at 12.5%. No question of indexation. Section 48 has been amended to that effect. But the market reacted, or the people reacted in both the manners. It is, in my opinion, most favorable. It is my opinion that this is more beneficial if the asset is held for a longer period of time. But there are some people who hold the asset not for a longer, when I say longer period of time, 10 years. There are some people who hold the asset for 5 years, 3 years. They get little affected because with the indexation gone, and especially an asset like not land but other assets, there will be a small loss also which they cannot enjoy. So people were reacting both ways. Still, 75% of the people, I feel, will be benefited by this provision of reduction in the tax rate and going away with indexation. But then, since the people were reacting, since the industry was reacting otherwise, while passing it as a finance act, they made an amendment in section 112. This amendment is in section 112, where they gave two options only for immovable property. I am repeating, this amendment is only for immovable property. For land and building sale, an assessee can either avail indexation and pay tax at the rate of the erstwhile 20%, or forego indexation and pay tax at the rate of 12.5%. Here again, for a student who is going to write their examination in May or November 25, now there is a tax planning element that is required. I need to work out both the mechanism and check in which case the assessee will be paying lesser tax, and there are other small aspects for this which needs to be understood. The nuance doesn't stop here. The nuance extends to the exemption under section 54 and section 54F. Now, why I am saying so? Suppose exemption under section 54, it says gross long-term capital gain or amount invested. Now, if I take the indexation, my capital gain portion would be lesser. If I don't take the indexation, my capital gain portion will be higher. Depending upon how I invest in section 54 also, this decision of whether I should go for indexation or not go for indexation is going to be understood too. So that is where the nuance comes. Section 54F is in the similar manner, because there you need to invest the net consideration, that is to a larger extent going to be the same whichever system we are going to follow, but based upon the proportionate basis, the capital gains exemption is going to work out. And there is an overall capping of 10 crores in both section 54 and 54F. Suppose without applying indexation, my capital gain is more than 10 crores. That means I can only avail to the extent of 10 crores under 54 and 54F. Whereas by applying indexation, my capital gain reduces to less than 10 crores, which is a possibility. In that circumstances, how will this provision be applicable? This is very interesting to do for immovable property, both from the academical and from the practical angle. Apart from this, all other long-term capital gain like jewelry, unlisted shares, work of art, architectures, paintings, all these things, indexation is removed and the tax rates are going to be 12.5%, and it is introduced during the year, not from the beginning of the year. It is from 23rd July. What if I have sold it in the month of June, or what if I am going to sell it after July 23rd? This is interesting to understand. Interesting, and these type of things will make the classroom is interesting, and also for practical purposes it will give you broader knowledge, because this indexation is for land and building purchased before or transferred before 23rd July. So we have to be careful about this. It can have a long-term impact also. How this provision works? What are all the nuances you have to understand in this provision? What are all the sub-factors that will affect this particular provision? What if I don't use the indexation, but my total income exceeds 50 lakhs or 1 crore? What if I use the indexation? Is it still going to be that surcharge has an impact? More on this in our classroom. The classes commences from September 2nd, 2024. Information about the classes can be got from the number that is there in the screen. Remember, classes are both physical as well as live online. We are going to have an interesting discussion, thorough understanding, and how to tax plan, how to understand the various impact of this particular exemption, including its applicability on the overall tax computation. Meet you in the classroom.